Good morning and a very warm and healthy welcome to Colgate's first virtual analyst call. To begin with, I hope you, your near and dear ones, are all safe and healthy. Let me begin by stating, as of this morning, all Colgate India employees and their families are also safe and healthy. First, I want to begin by thanking our consumers for their continued trust and faith they put in our brands every single day. I also want to give a shout out to all our customers, distributors, and suppliers for their enduring partnership and their support during these unprecedented times. Last, but certainly not the least, I want to take a moment to thank each and every one of our employees and their families. Their resilience, passion, commitment has been an absolute source of inspiration for me personally, and one can only help feel proud of being part of the Colgate India family. Moving on to today's agenda, Jacob and I will go through a prepared presentation and subsequently open up for a Q&A session as highlighted at the end. Under normal circumstances, this would have been a lot more interactive and audiovisual, given the audiovisual nature of the content. But given the nature of the call, I will do my very best to make it as engaging as possible to do justice to the brilliant and phenomenal work that has been accomplished by the entire organization. If you recall, when we met maybe about 7 or 8 months ago, we spoke about a sharpened focus on 3 core aspects to make sure that we continue to help drive sustainable, profitable, long-term growth and value for all our stakeholders. While the COVID-19 pandemic has required us to take the right course corrective action, we remain committed to these fundamental building blocks around driving sales growth, maximizing earnings, and of course, thought leadership to continue to win. Let me kick it off with the first one, which is about driving sales growth. In the context of driving sales growth, we spoke about 4 critical pillars of success, and success being defined as making sure we excel with every single stakeholder of ours across each and every one of these pillars. It starts with building brands. Strong brands, as we've already seen in the most recent periods as well, stand the true test of any and every crisis that is thrown at it. Because when people are anxious, when people are nervous, when people are concerned, they often resort, more often than not, they will go back to brands that they've known for years and years on end. They go back to brands they trust. They go back to brands that they put the hands of them and their families. And they've known it for not just a year or two, but have known it for many, many years and have grown up with most of these brands. In the context of that, we start our first pillar as well with making sure that we continue to drive superior brand engagement. At Colgate, we genuinely believe our purpose is about making sure every single person has a future that they can thrive about. In essence, we champion optimism, and we believe that optimism is brought to life through the power of a smile, or very simply, as we say, smile karo aur shuru ho jao. I'm sure you've seen a lot of material in multiple mediums over the past 6 to 9 months on this front. We typically take stories that represent the evolving conversations in our country and make sure that the brand represents the power of a smile. That even if you take a task of adoption, which perhaps is amongst the most planned and thought through exercise any family undertakes, despite that planning, despite that preparation, when it comes down to that moment of truth, there is still that degree of hesitation, that little bit of anxiousness, those butterflies in the stomach. And we arm our consumer by giving them the positivity, the optimism that a smile can help overcome. In addition to this, we're now looking to make sure that the smile is amplified across multiple touch points, including reality shows, thereby making it a part of the natural lexicon. In effect, every time you think about a smile, you're going to think about us or our brand. The third pillar of making sure the equity continues to become stronger and stronger is about championing causes and people. Ultimately, it is people who make a difference. And time and again, we've seen our wonderful country has some absolutely stunning stories of resilience, perseverance, and overcoming all kinds of hardships. Whether it's Anand Arnold, whether it's Sindhu Tai, or whether it's Divyanshu, each one of them has had a different aspect or a different challenge to deal with. And it's been their optimistic smile that has given them the courage to come out shining. We also make sure that these stories are brought to life across multitude of mediums, whether it's Yashasvi's story on Facebook, whether it's a story on Instagram. We make sure that every Indian consumer has an opportunity to interact and actually see these stories being brought to life. We don't limit ourselves just bigger conversation. We also are a brand that is lighthearted. We're also a brand that is youthful. At the same point in time, while we talk about the bigger context and the societal change that we ultimately want to drive, we also are about having fun. We're also about making sure there are moments that matter and people enjoy themselves in those moments. A recent example is the work that we've done with TikTok in an attempt to engage with the far younger generations of this country. As you can see, by owning the smile again, a simple Smile Day challenge garnered more than almost 2.5 billion eyeballs. A fantastic performance. Another recent accomplishment, and I know each and every one of you is wondering what this picture actually is. And no, it is not a photoshopped picture. This is live, and I can tell you this because I happened to be there when this event actually happened. It was an absolutely proud moment for us when 26,000 children came together at one venue, which was the Kalinga Institute of Social Sciences, and actually brushed their teeth, breaking a world record. Certainly a proud moment for India and, of course, all of us at Colgate India. I also want to again call out the trust and faith put in our brands by our consumers. A great big thank you to every one of them. For the 9th consecutive year, we are India's most trusted oral care brand. Now that's on the core Colgate equity. Given how all of this has delivered in terms of the results, very simply put, as of March 2020, we've had a more than 300 basis point increase in the number of buying households for brand Colgate. Not only that, so not only are we in more homes today than we were, we're also strengthening the resilience in terms of the love our consumers have for the brand, with a 160 basis point increase on the strength, the brand love as well during the same period of time. So we're winning hearts, we're winning minds, and most importantly, we're winning at the home, where ultimately the product is put to the final test. While we go about building the equity, we also want to make sure that every single person, no matter who you are and what part of our portfolio you buy, we have something that is meaningful to offer you. In effect, we have a portfolio that caters to just about any and every single person in this country. And we do so with the right aspect and with the right communication and the right experience that one would get from that product. Let me start off by Max Fresh, which is our youthful, our freshness bundle, which is all about energy. How we've translated a simple task of a morning brushing routine and that burst of freshness it gives you is about talking in the context of how it helps give har subah de aapko ek nayi shuruaat. No matter what your previous day has been, no matter how many hits, how many misses you've had the previous day, every morning gives you the opportunity for a fantastic new start. And who better than Ranveer Singh to bring this aspect of an energetic start to every morning? Given his natural charisma, his natural bursting of energy, we find him the best ambassador for our brand and constantly look to amplify his experience across multiple vehicles and mediums, including a rap battle, where we were awarded the biggest digital award, the Gold Digital Award for Best Use of Instagram. The second aspect we spoke about, if you remember, and I couldn't talk much at that point when the questions asked of me was on what are we doing about Ved Shakti. And if you recall, I spoke to you about the fact that there is something new and different brewing. And it's about a bigger take on the core of the consumer opportunity versus yet another Ayurvedic product. I'm pleased to say that as of Jan-Feb, we've gone live with a more proactive approach that structurally helps to resolve bigger problems for consumers by truly adding value in an area of expertise that we are extremely familiar with, which is the mouth of a consumer. And very, very simply put, it is all about Muh Swachh to Aap Healthy, making a connection between keeping the overall health of your mouth and thereby improving your overall health. So the mouth and the body connection. We've launched this campaign. Interestingly enough, this was done proactively way before COVID and has only heightened and has actually amplified and has seen consumer traction even more given the nature of the pandemic that's hit us. This was done again across multiple touch points, making sure that we brought it to life across every single opportunity where a consumer had a chance to interact with our brand across the entire buying process. The results, before I jump into the results, we also had a mega sampling program going across to 400 plus towns across the country and a massive 70 million samples in order to maximize trial opportunities. I think the results speak for themselves. We've seen excellent positive traction, plus 15% in terms of awareness, almost 10 times new trials, and a 2x increase in household penetration for Ved Shakti. The second pillar of growth is innovation. Again, when we spoke to you earlier, we said you will see an amplified series of initiatives from us. We continue to stay true to that intent and remain. It begins with the relaunch of our flagship variant, which is Colgate Strong Teeth. Again, an innovation that was born in India, for India, first in India, and is now actually being taken all over the world. It's absolutely revolutionary in terms of how it works. Because the research has been going on for a bit with over 18,000 people participating in what we've been able to build for our flagship business. The power of the solution lies in the structure of the formula. It literally is like a smart formula where it feeds the good bacteria in your mouth while weakening the bad ones and ultimately giving you 4 times strengthening power for your teeth. I can confidently tell you no other toothpaste can strengthen your teeth more than Colgate Strong Teeth. We brought this to life again through a multitude of mediums, making sure that whether you were in the smallest villages of rural India and could only spend 10 rupees on a toothpaste, we still made sure that the best formula was in the 10 rupee product as well, not compromising a single opportunity to improve overall oral health of our consumers in this country. The flip side to it, completely very different, largely urban, largely metro, largely modern trade driven, is maximizing on the charcoal opportunity. We launched this product about 4 months ago and it's seen some phenomenal traction despite even the COVID pandemic that's hit us. Again, largely urban and modern trade oriented, the focus here is about amplifying a current rage and trend around charcoal ingredients. Believe it or not, it's actually a black toothpaste, and it's the first black toothpaste, not just in India, but anywhere in the world. We make sure that different facets and different consumer groups of ours also build meaningful businesses. Kids, and most recently, the concern that mothers have with all the kinds of additives that are typically found in a lot of children's products. Our new line of Colgate Kids products at a premium price make sure that we have 0 artificial colors, 0 artificial preservatives, 0 flavors, and 0 sweeteners. Again, this is largely focused on modern trade and urban India. We don't stop just on the toothpaste front. From a toothbrushes side, we're looking to amplify not just the charcoal phenomenon, but the broader natural ingredient trend with the launch of Colgate Zigzag Neem, along with Super Flexi Charcoal and Zigzag Charcoal brushes as well. I'm also extremely excited to launch our first ever Colgate Bamboo Brush. Again, this comes with a bamboo handle, completely recyclable, 0 plastic packaging, and the bristles themselves, once again, infused with bamboo charcoal. On the electric or the power side, we continue to amplify our portfolio slowly but surely. We're powering up the brushing experience with the launch of our battery brushes, which allow for a very meaningful and powerful brushing experience at an affordable price as well. For those of consumers who want to make that transition from a manual brush into the world of battery and electrical, this offers the first stepping stone into that new and different world. Our innovation efforts have not stopped in oral care. We've broadened our entire Palmolive franchise with the launch of luminous oils. Originally began with just shower gels. We've now extended that from body wash into shampoos and, more importantly, into liquid hand washes as well. The newest addition to our family, Palmolive sanitizers, literally conceptualized, built and shipped in a record time of less than 2 weeks, all done in April. It's already in market. Hopefully when the markets do open up and you have an opportunity to step out, you will go up and pick this up. I've been using it and I can guarantee you it's a fantastic product, not just in terms of how it works, in terms of its 99% germ kill, but more importantly, it brings the Palmolive brand to life by caring for your hands and giving you a very pleasant fragrance experience as well. The third pillar is about winning in emerging REs. There's always been conversations on how are we seeing growth opportunities across the REs and whether are we too wholesale focused or not. Let me reassure you that we believe in fishing where the fish are and make sure that our go-to-market strategies are representative of where growth and where the consumers are actually shopping. I'll kick it off with e-commerce. I'm pleased to say that we've got a dedicated e-commerce team in place. Within just 60 days in the last month, couple of months of 2019, we kicked off a young dynamic team as a separate business unit dedicated exclusively to our e-com business. We've got a great portfolio made for e-com, and our customer engagement platforms and partnerships are well underway. I think the results speak to themselves, not just in terms of the 3-4 years of history, but even if I take a closer look at the first quarter, you can see our market shares, performances in e-com are already up 200 bips versus our history. Not only that, despite the COVID situation and many platforms being challenged on labor and delivery issues, we've continued to see strong double-digit growth in the YTD period so far this year in the calendar year. The second emerging RE is modern trade. Again, we've sharpened our focus in terms of our portfolio. So our portfolio, and you've seen some of these products, very distinctive, very different, very meaningful for a consumer who's looking for different things. Obviously priced differently, obviously packaged differently, and even sized differently. Because our learnings continue to indicate that shoppers in this area are looking for very different things from what they would classically purchase in their own kirana store. Second, demand generation models here require us to be different. It is about in-store visibility. It is about becoming irresistible as a brand and making sure that entire experience is brought to life at that first point of purchase. Again here, the results speak for themselves. More than a 2x growth in the overall business over the years. But again, more importantly, even if we take a nearer-term outlook to it, our market shares are up 160 basis points in overall modern trade India as of the first quarter this year itself. The fourth pillar is about our continuing our strength. We've all spoken about this many, many times. While we continue to make sure that we win in the emerging REs, we can never forget the core of our business, which is the distributors. They remain the backbone of our operations. They remain the key as to how we're able to cover the phenomenal number of stores that we do cover and make sure that Colgate is amongst the most well-distributed brands in the country. In the last survey that was done amongst distributors, Colgate as an organization did exceedingly well, not just coming in as the most preferred partner to work by a sizable disadvantage, but also when you put it up against some of our other peer group companies who have a much wider range of categories, this certainly is a moment of pride for every one of us. In the context of making sure that we are protecting the core of our business, we've also introduced multiple mechanisms, multiple vehicles and solutions that cater to the wholesale channel again. Once again, with an amplified focus on building the brand, its loyalty, both not just with the final consumer, but also with the retailer themselves. The third aspect of our go-to-market is a continued effort to digitize and amplify our transformation on this front. Whether it's technology simplification and handheld devices to our salesmen, whether it's communication between our distributors, our organization, and whether it's simple analytical dashboards that allow people on the ground to make the right decisions every single day, real time. All our efforts on the technological front are amplified towards getting our productivity right and making sure that they're empowering our people to take the right decisions based on what data is applicable to them. Interestingly enough, COVID also gave us an opportunity to try new things. So over the last couple of months, we've had multiple partnerships with so-called last milers or even other delivery partners, where despite where sometimes our own distributors have been challenged in terms of labor, we've been able to work with Links, LoadShare, Dunzos, and Swiggy's, Ubers, and Zomatos to help with delivery, whether it's from our distributors to the store or in some cases even from our distributors directly to our consumers. Last but certainly not the least, we're also looking at contactless distribution solutions, whether these are through apps or through leveraging the power of WhatsApp, making sure that, again, in a post-COVID era, we come out first and ready for what could be a very new and different distribution model. With that, I now hand over to Jacob to take you through the next part of the presentation.
Thank you, Ram, and good morning, everybody. So, our financial strategy, no change to that. Drive top line, drive gross margins, take non-variable overheads down, invest behind advertising, and drive operating profit up. So, the Q4 results, you had a look last year. We were tracking quite well till the last couple of weeks into March. So net sales was down 7.4%. Gross margin at a healthy 64.4%. Advertising 14.6%, a steep increase versus prior year trends. EBITDA close to 25%, and profit after tax up 3.3%. If you look at a full year basis, net sales was up 1.2%. Gross margin at 65%, which was 20 bits up. Advertising at 14% is at the highest we've ever been, and we've been upping our brand engagement and communicating the innovation that Ram talked about. EBITDA at healthy levels, 26.8%, and profit after tax up 5.3%. Net sales, CAGR of 9% over the last 10 years. While gross margin continues to be a good story, despite the fact that we do get a good part of our business from the smaller packs, the LUP packs, mainly sold in rural. We've also been upgrading our formulations. Ram mentioned the Amino Shakti relaunch, so that's been an on-course on margins, and we've done a couple of other big upgrades in formulations over the last couple of years. So we are focused on bringing the best oral care products to this country. Moving on, advertising, as I mentioned, at record levels, we up the level of engagement and communicate all the innovation that's going into the products. EBITDA continues to be healthy around the 27 levels. Profit after tax, CAGR of 7% over 10 years, 816 crores in the more recent period. EPS up to 30 rupees per share, again a CAGR in line with the profit. So dividend per share, again a commitment to returning money to shareholders that we don't need to keep in cash form. So also signifies the level of confidence we have in the company that during this period also we upped our dividend as per the trend of the last few years. So during this period, things that we normally focus on, but even more focus in this period. So receivables, we've been very sharp on monitoring it and blocking customers if there is any delinquency. Suppliers, we continue to pay on time because we understand a lot of them need the cash to keep the business running during this time. And we also have an active vendor finance program at very competitive rates if they want to be paid in advance. Inventory coverage, it's a dynamic situation. We are conscious of the possibilities that one warehouse may need to shut down sometimes or one area will be contained. So we are just trying to have that flexibility while maintaining working capital levels. And of course, the cost focus will continue to be a big thing across lines. So that's all I had on the financial piece. I'll now hand it over back to Ram.
Sir, can we open the call for a Q&A session now?
No, there is a bit more left, so...
Sure. Over to you, sir.
Ram, can you give the controls to Ram?
He already has the controls, sir.
Okay.
Let me kick off the last and equally important section in terms of our ability on how we lead to win. We focus this around three key critical things: our impact on people, our impact in terms of our own performance, and of course, our overall contributions towards a sustainable and healthy planet in the future. In terms of our people, it's only obvious that I kick off with what's probably top of mind for just about everybody right now, which is what has been our response plan on COVID. First and foremost, I'm pleased to state that we've made sizable contributions to make sure that we've given ration kits, oral health packs, focused towards all the underprivileged or challenged communities during the last 6 to 8 weeks. In addition to that, I'm sure you've already read the news that included our name as part of one of the key players working with the government on the entire Suraksha Store initiative, which is all about making sure that hygiene and social distancing standards are followed not just in modern trade environments, but across every single store in this country. Third, a project that we're very, very excited about. As you can imagine, the dentist community or the dental professionals are amongst the highest risk communities, and most dental practitioners, almost all dental practitioners, have been forced to shut their respective practices over the last 8 weeks or so. Working with them, what Colgate has been able to do is actually introduce the Dentist for Me, a virtual initiative that's absolutely free of cost to any consumer anywhere in this country who can simply reach out and can get a virtual, or whether it's a visual or an audio conversation or even a chat with the dental profession and give you advice on how you can immediately deal with some of your oral care concerns or issues that you may have. We've tied up with more than 250 dentists, and within an extremely short period, we've had quite a stellar response with more than 5,000 plus people already targeting or already reaching out to these dentists itself. In addition to this, we're extremely mindful of making sure that they're maintaining the highest hygiene, sanitation, and social distancing norms across every single one of our own facilities. Whether it's our factories, including the way they work, the way they're picked up, or our warehouse teams and the full PPE gear that they actually use when working in any one of our warehouses, and including our own sales team, that when they're interacting, whether it's a distributor or whether it's a store owner or a customer of ours, they themselves are practicing all required hygiene and social distancing norms. In terms of our continued efforts on the broader side of improving oral health and defining an oral health strategy and a shift towards an improved oral health approach in this country, we're proud of our flagship BSBF program. I'm pleased to say, since its inception, we're now at almost about 170 million children reached through this program. In addition to that, making sure that we remain sustainable in our approach to all our production capabilities, whether it's the utilization of water in our plants, whether it's self-generated power, whether it's LEED certification. We're making sure that we remain at the cutting edge of all sustainability efforts and ahead of the curve, both in terms of the norms as well as what industry standards require us to do that. From a planet point of view, water remains a critical priority, as you can well imagine. There's a large part of India that still struggles with decent drinking water. We partnered with organizations such as Water for People. This is an initiative that we've undertaken in Maharashtra and looking to supply water in the district, in the region of Amravati district. We're also partnering with the likes of Pratham, with the likes of Shikshadan and Seva Mandir, with women's self-help groups, and also our continuing efforts to empower children with education across different aspects. So with that, Jacob and I come to the conclusion of our prepared remarks. We will now hand over to the operator once again to help with any Q&As that you may have for us. Before I end, let me once again say to every one of you, wish you and your respective families a safe and healthy week, day, month ahead. Smile karo aur shuru ho jao.
Thank you very much. We will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, thanks for the opportunity. My first question is on the Palmolive part of the business. So historically, Colgate India has been quite cautious on this with very little mass media spent till now. You are already a dominant leader in toothpaste, and now competition will go up further with HUL handling the GSK Sensodyne part of the business also. So in chemist channel, clearly competition will increase. Plus, because of the COVID, clearly you have also launched new products in Palmolive, and hygiene will become that much more important for the customer. So in that context, because of the new leadership which Ram has provided, and because of all the reasons which I mentioned, will Palmolive see higher ad spends and higher focus than earlier?
Hi, Abneesh. Thank you for the question. I would say I think we're cautiously optimistic about our efforts on Palmolive. The advantage we have is Palmolive has a wonderful positive residual memory in India, which is advantageous to us. If you recall, when we last met as well, we spoke about a strategy that will slowly but surely see us bring the right portfolios in the right categories on the Palmolive brand. We don't want to end up being just yet another player in the segment, but we want to make sure that the brand has a meaningful presence in terms of its distinctiveness, one. Second, in terms of its choices of categories and products. And 3, in terms of the overall brand experience. With that in mind, yes, we will continue to make sure that the investments are placed correctly against the consumer audiences that we are going up against. So if it requires us to be metro-focused, it will be metro-focused. But if there are opportunities that are broader-based, we will accordingly make sure that we engage with the right touch points and invest accordingly.
Thanks. My second question is on the broader strategy. When we had met Ram 6 months back and today's presentation also, you have said volume growth and margin expansion both are important. Now when I see FY20, the gross margins are fairly stable, which is not bad. But if you see EBITDA margin, there's a dip of 90 bps, and ad spend has gone up by 130 bps. So why in FY20 this broader strategy in terms of margin expansion, and volume growth also has been fairly limited in FY20. Yes, COVID impacted last 2 weeks, but entire year should have been okay. So in FY21, seeing the current scenario, do you see volume growth and margin expansion both possible?
So there was quite a few questions in there, Abneesh, but let me try and tackle a couple of them, and I'll let Jacob jump in on the margin and the EBITDA one specifically. Let's talk about growth first. I think even when we met last time, we spoke about a balance between volume and pricing. Very difficult to gauge and predict what's going to be the consumer full payout of COVID. As you can well imagine, we were already starting to see certain categories or category declines, specifically in rural, even in the last 3 trading quarters. So COVID just accelerated that. So I think the full impact of COVID will genuinely be felt only in the next perhaps 2 quarters, between Q2 and Q3, calendar year Q2 and Q3. Having said that, I think our portfolio, and you'll see choices we continue to make, will look to make sure that we bring a portfolio of products that, very simply put, will offer different people different things. So irrespective of who you are and where you are and what your purchase capacity is, we will have fundamentally look to have a solution for you. I think that structurally will give us an advantage in terms of striking the right balance between volume and pricing growth. Jacob, you want to tackle the question on margin and EBITDA?
Yeah. So on margin, Abneesh, our focus will be to drive gross margins, gross profit up. So that will continue to be a focus. The EBITDA margin, to the extent it's because of changes in advertising, that would be something we will really need to calibrate the advertising required to put all the communication through and even some of the other stuff that's doing. So I would say gross margin, yes, it needs to go up. EBITDA, to the extent it's impacted by advertising changes, we would be a bit more flexible.
Last question, and in fact it's a follow-up only. On the new products launched in the last 6-7 months, could you give us some clarity on the performance and the numbers? And on the naturals versus last 1 year, how much has the percentage moved up?
Let me jump in. So I think 3 big, let me start toothpaste first, then I can jump into some of the other categories. So toothpaste, obviously the biggest relaunch has been the flagship, Strong Teeth. So strong performance kicks through going into the back half of last year. We continue to see that trend, and frankly speaking, given the preference and given the sheer distribution and availability that CBC has, we think there's just going to be an organic advantage of being India's single largest toothpaste. And we're already seeing it. If you look at our recent data as well, there's just been a natural tendency from a consumer point of view to go back to CDC. So I think that's the first one. And if you look at, let me build a couple of more points there. Even if I look at some of our structural, very, very core structural indicators of performance, which is household penetration, health of a brand, again, on both those fronts, we're seeing good momentum on CDC. And I think that's always a good indicator. That's on CDC. The second one is on charcoal. Charcoal's been a very interesting journey. Hopefully, Abneesh, you've tried it by now. I remember giving it to you as well, and hopefully you're enjoying it and I've become a loyal user to it. But it was launched literally December, Jan. With a very aggressive modern trade strategy and a metro focus, and obviously a very digitally oriented advertising platform, was off to a flying start. And despite COVID, despite all the challenges of COVID, it's actually on a national urban basis hit a 1 share in modern trade within just 3 months. To us, that's very encouraging. Not only in terms of its uniqueness as a bundle, but I think given the fact that it's a 100 rupee toothpaste, and despite all of this, it's doing well. The third one on Palmolive, again, luminous oil doing well in the markets and in the stores that we have it in. On liquid hand wash and on sanitizers, we've literally just launched them in the market. I mean, hand sanitizers, it's not even been about 5 weeks, I guess, 5.5 weeks or so. And hand wash has been about a month and a half, maybe 2 months. So, and obviously these are seeing good demand simply because of the conditions. So it's hard to gauge if it's the absoluteness of the performance independent of the circumstances. That's all.
Okay. That's all from me. Thanks a lot.
Thank you.
Thank you.
Stay safe and healthy, Abneesh.
Before we take the next question, I'd like to remind all participants, if you have a question, you may press star and 1. and also requesting all participants to please limit your question to 2 per participant only. You may come back in the question queue if you have a follow-up. Next question is from the line of Latika Chopra from JP Morgan. Please go ahead.
Yeah, hi. Thanks for the opportunity. If you could just walk us through, your growth profile, how it changed between Jan, Feb, then to March, and what you're recently noticing post-March. And in that context, what is the current, scale up that you've seen across your manufacturing and distribution channels?
Sure. Hi, Latika. How are you? Good to hear from you. I'll kick it off, and if Jacob, if you feel I missed something, please add any additional color that you think would be necessary. So let me start with the growth profile. I think Jacob touched upon it a little bit. Heading, pre-COVID, I think we were having a stellar quarter. We were tracking extremely well on just about every internal metric that we would have liked to. Unfortunately, the last 10 days of March impacted the entire quarter. It's simply not because I think the brand isn't in demand. I think it was a simple function of a consumer's physical inability to go and buy a product, and similarly, our challenge in terms of making sure that the product was available. So let me start off with that gives you a sense of where we were on the quarter prior to COVID hitting us. Subsequently, once COVID hit, I think I'll break it down into 3 periods of time. Right, which is, let's say, from the lockdowns around March 23rd, give or take, till about April 10th, then the back half of April, and then how May is looking. And the reason I'm breaking this down, because as each of you probably know way better than I do, in each of these phases, there were different larger macroeconomic factors at play, including all the practical challenges one has, in dealing with any crisis of this sort. So during the lockdown, I think the first week was particularly challenging, simply because there was not enough clarity on what essentials were not, how would people shop, who can operate, who cannot operate, so on and so forth. So it was pretty much a period of settling in. I think once that got clarified, things started to improve in the back half of April. Simply put, in the back half of April, the problem shifted to something a little different, which was more operational in nature, which is number one, labor coming back to work, whether it was at our plants, whether it was at our warehouses, or whether it was even our distributor operations, or even our customer operations. So even a lot of our direct customers had a lot of their stores shut. As a result, the opportunity, the physical number of stores in which one can supply product was quite dramatically reduced. So I think that was the context leading into the back half of April as well. A labor challenge, and a labor challenge that got amplified specifically, at least at our factories, not because of the labor's desire to come or not come, which was one part of the problem. But beyond that, as you can well imagine, even if we have a plant, our Sri City plant, for example, technically is in AP, but our associates come from not just the district of AP where the plant is, but the neighboring district, and as well as some of them also come across from Tamil Nadu. You can well imagine the challenges we faced in terms of not just the interstate, but also the intra-district movements that was allowed or not. So I think the back half of April really was about more operational in nature. But again, I would say that we saw things coming back, and we were able to get our operation kicked off quite successfully. The third part of it is, which is, let's say, from an April 20th onwards all the way through to May, our single-minded focus really has been on stock availability at store. The encouraging piece of news for us, at least, is the resilience and the strength of the brand has come through in shining colors. We've seen a continued demand for brand Colgate, which is fantastic, and a shout out to our consumers for their continued trust in us. I think we've seen that demand continue to exist. So our real focus has been about stock availability. We're managing this on a very, very granular basis. This is done in the context of literally 730 political districts of the country, defined by their zonal colors, and then how our particular operations are geared towards making sure we have product available. Our plants are up and running. We're somewhere between 70 to 80% capacity output over the last in the recent periods, that you can imagine that was significantly lower in April. A call out to our customer service and logistics team. Actually, our warehouses went into effect way earlier than anybody else's did. And despite having tremendous challenges, whether it was limited working hours, availability of trucks, availability of labor, what we were able to manage to do, and I think Jacob touched upon it, is we intelligently managed to hold the right inventory of the right SKU at the right location. That helped us tremendously in continuing to cater to demand that existed. Jacob, I don't know if there's anything else you want to add.
Yeah. So the other piece also on the manufacturing side, we're focusing on the few really fast moving SKUs. So there's a brutal prioritization going on in terms of manufacturing side. So that's been another big focus for us.
Thanks, Ram and Jacob. Just the second question was, how are you thinking about, the disruption on the wholesale channel? Your salience in that channel is on the higher side. So how are you thinking about that? Does it get disrupted for long? How could you mitigate that, particularly feeding into the rural areas?
I think honestly, we see it as an opportunity and as a strength, Latika. The reason I say it is on two fronts. Let me step back first and talk about the bigger picture, and then I'll come back specifically to how we're seeing wholesale. So on the bigger picture, like I said, there's been a demand for the product and our brand. As a result of that, just like water, ultimately even our products will find their way. So what we were able to intelligently do was make sure that we channeled our capabilities from a go-to-market point of view, whether it was through direct coverage, whether it was through leveraging of cash and carries, or whether it was even about talking through some of our what we call our beat wholesalers versus the wholesale mandis. I think channeling our distribution towards those allowed us to make sure that the product remained available across the supply chain. I think that's the macro piece of it. From a specific area of focus on wholesale, the good thing about the wholesale channel is that they're resilient, number one. The second good thing is, at least from our point of view, is that typically a wholesaler will only stock products that have tremendously high velocity. Because even they are equally uncertain and do not want to lock up their liquidity on something that's going to be stuck with them. So when it comes to that, simply said, quite a few of our SKUs are cash, because the speed at which or the velocity with which they can flow through the system allows a wholesaler to accept a little bit more of risk with us. Now, the second part of it, which is perhaps the more challenging one even for us, because it's a little bit of unknown, is when will the entire mandi or a wholesale mandi function at 100% operational level? And like I said, while we remain conscious and keep a close monitoring and an outlook as to when that is going to happen, we are compensating that with all our other go-to-market efforts and tools, whether it's a direct coverage, whether it's a beat wholesaler, or whether it's a cash and carry.
Sure. Thank you so much, Ram, and wish you the best.
Thank you. You too. Stay healthy and stay safe, Lavika.
Thank you.
Thank you. We take the next question from the line of Vivek Maheshwari from Jefferies. Please go ahead.
Hello, am I audible?
Yes. Hi, Vivek.
Hi, Ram. Hi. Very interesting presentation. I must compliment you for that. But, I was hoping to see some, market share slides, something that you usually present. So can you just talk about overall market share as well as market share in the natural segment, how it has trended, let's say, leave aside 2020, but let's say until 2019, what was the trend that you were seeing? That's question number one.
Okay. So market shares remained stable in 2019, slightly down. Volume was healthy and comfortable. I think 2020 or the first 3-4 months that we're seeing so far has seen us pick up shares consecutively for almost, depending on which retail environment, we continue to be heading in the right direction. And we're monitoring, obviously there's going to be a delay even in Nielsen data coming into us. But having said that, we're closely monitoring our scan shares as well, which is the data that we directly get from our customers. And I can tell you that pretty much 3-4 months consecutively on a run, we've been seeing share growth and momentum. So I think that's good news heading on that front. Even March, despite all the noise and news that happened everywhere, our overall shares were up 80 bits on a national basis. For a brand like us to grow 80 bits in a month on a national basis is commendable. So I think that hopefully talks to the point on broader market shares. On naturals, early days, but very, very encouraging. From an overall share point of view, we're up about, I think, 20 or 30 bits. I think overall it's about 3 share points, close to 3 share points of the overall Ved Shakti franchise. Our new platform and the new positioning that we've undertaken has literally kicked off only about 3 months ago. So I don't have broader national numbers as yet, or enough data points to have a sense of how successful it's been so far. What we do have are again early indicators from some of our modern trade customers. And I can't reveal those numbers because they are unfortunately confidential. But I can tell you this much, that the momentum has been significant, and if that's an indicator of what could be national performance, I think we're on the right track. Obviously, we have to continue to make sure that we keep the pedal to the metal, because you can imagine we're going to have competitors who will be coming after us on that front.
Sure. And the second thing is, slightly long term. So not, I know 2020 is going to be a tough one, but, and this is the question I have asked, the past CEOs of Colgate as well. So, one of the worries that investment world is about, the higher penetration level, both in urban as well as rural, which is where, per capita becomes more important. So, but as an urban consumer, I haven't come across any, social media ads, be it YouTube, Facebook, Twitter, where you are urging your consumers to actually brush twice a day, given, such a low penetration of night brushing. So what are your thoughts on that piece, because historically I've never got a clear answer from the management, to be honest.
Okay, I think you answered the question as well, Vivek. I think first and foremost, are we aligned with you that per capita consumption is a big opportunity? Absolutely, no question about that. Are we doing something about it? I think if you remember, that's why I started off with the BSBF program. If I take a historical outlook to it, BSBF, yes, you're absolutely right, was largely rural-oriented. And even there, we focused our efforts mainly in those states where per capita consumption and even penetration was significantly lower than national averages. So, it's like comparing TN Maharashtra against the UP Bihar. And obviously, we were channeling our efforts there. What we've done now is we've repurposed our visits, and we ran 2 pilots actually in Delhi and Mumbai. So going exactly to your point, these 2 were put into place in the back half of last year, specifically going after an urban India initiative. If I remember my numbers correctly, I think we had about 4.5 or 5 billion contacts just in these 2 cities. Early results were again positive from an early indications point of view. We're now framing those 2 pilots into a more sustainable strategy. They're very close to doing a few things and signing a couple of deals. I can't talk about them right now, but I think we're very aligned with the thinking that per capita consumption remains a massive opportunity for us now, and the category itself. Now, having said that, I think the unpredictability for us and for anyone, I guess, is where will the fallout of the pandemic end up? Will it impact rural consumption? Will it hurt liquidity? We don't know that as yet. But we do believe that the urban shift or the urban amplification, more than the shift, I shouldn't say shift because we're going to continue with our rural BSBF as well. But I think the urban amplification is the right thing to do, and perhaps the lower hanging fruit if I take a longer term perspective to it.
Sure. Thank you and wish you all the very best.
You too, stay safe and healthy.
Thank you. We take the next question from the line of Vicky Punjabi from JM Financial. Please go ahead.
Hi, Ram. This is Richard here.
Hi, Richard.
I just wanted your view on your distribution, strategy. I mean, if you look back at the last few disruptions that we've had in the country, I mean, going back to demonetization, I know you were not there at that time, but I guess you would have looked at the data.
Hello? Richard, I lost you.
Yeah. Ram, can you hear me?
Yes, I can now.
Yeah. So what I was talking about was, was with regards to how you, how you typically end up in a, in a disruptive environment. If you go back to demonetization in November 2016, and I know you were not there that time, but but I'm sure you would have looked at the data and also how things panned out for Colgate in this current disruption. Do you think, your distribution strategy, vis-a-vis the wholesale dependence, which I guess is higher relative to some of your peers, do you think that is something that needs a revisit? And and in the light of what has been happening, do you think that that you would want to go for a revamp of the whole distribution strategy, direct distribution, wholesale dependence, or other such stuffs?
Great question, Richard. So let me start by saying a couple of things. I think you're spot on. When we looked at we did as a team, as COVID was looming around the corner, we did look at all the learnings that we had as a group and as an organization. And despite my not being there, we've got an unbelievable team that took us through that point in time, right? So their learnings did exist. So two things that we learned. I think the first learning was brand salience, Richard. Jacob can correct me if I'm wrong, but one of the things we had done during Demon was we actually pulled the brand off air. And I think one of our biggest learnings was that was a mistake. It took us almost about 3 months to regain that salience. This time we learned that lesson and we did not. So we've continued to advertise. And I don't know if you happen to be watching all mediums, you should be hopefully seeing a hell of a lot of advertising from us. I think that's the first thing on the brand, because ultimately everything comes down to demand, right? Only if a consumer is going to create the demand for us are we going to be able to fulfill it through a go-to-market system. So I think that was the first learning, is make sure the brand remains salient, one, and is talking about specific solutions towards today's needs. And I think we hit the right chord on both fronts. On the second front, I think the second learning which we had was we knew about the dependence on the wholesale that we've had in the past. So what we had already done structurally going into Q1, irrespective of a COVID, was as we had put the growth pillars into place, we were literally looking at each retail environment as a standalone, identifying what would be its growth trajectory, who would be the shoppers, where would that source of business come from, and therefore what should be our portfolio, our plans, and our effort on that front. So I spoke about a few of them. So we structurally broke the market down into modern trade, e-com, and of course, even in the general store, you've got what we've defined now as an indirect modern trade. So a lot of Kirana stores, specifically if you go to the south, you will see a lot of classic Kirana stores who in some form or manner converted them into an environment where a consumer can walk in and actually interact with the product. So what we are calling indirect modern trade. And then, of course, you have your classic Kiranas, your general stores, which are all serviced through the wholesalers. So I think exercise number one in the learning process, which was more a proactive approach to a strategic think on how we're going to grow the business and the portfolios across these respective REs, happened before even COVID even hit. And frankly speaking, some of the numbers you saw that we put up, whether it was e-com, whether it was on modern trade, is a result of that. So we repurposed ourselves both from an organization point of view. I spoke a little bit about it. We literally dramatically ramped up our e-com organization. I can tell you it went up 3-4 times in terms of number of people in 60 days between November and December. Thank God we did that. Despite whatever happened to some of the platforms, we are very, very strong and stellar double-digit growth on that platform. Similarly, on modern trade, again we've got feedback from most of our customers saying we've managed the crisis well and we've been able to put the right things into place at the right time. On the wholesale front, the other part of the comment I will leave you with is that, remember, while our wholesale dependence on a national average may be slightly higher, and it's not that much of a delta more than others, by the way. It's not like we're at a 100 index and the others are at a 50. It's not that dramatically different. Where it varies really is in the north and the east of the country. Now, in the north and the east of the country, that's where the wholesale dependence is a little greater than the national average. And I think there's where the bigger and more longer term opportunities lie for us. Now, North is a little easier than the East, simply because of geography, how the markets are set up, and frankly speaking, logistics and availability of quality distributors and distribution mechanisms that exist there. So I think that's how we are looking to constantly evolve both our strategy in terms of defining where growth will come from, how will that growth come, and then making sure that we have the right portfolio and the right organizational structures in place to go out and address that.
Thank you. We take the next question from the line of Manoj Menon from ICICI Securities. Also, before that, I would like to remind participants, please limit your question to 2 per participant. Thank you. Please go ahead, Mr. Menon. Mr. Manoj Menon from ICICI Securities, your line is unmuted. You may please go ahead with your question. As there is no response from the current participant, we take the next question from the line of Shirish Pardeshi from Centrum Broking. Please go ahead.
Yeah, hi Ram, hi Jacob. Good afternoon.
Hey Shirish, great to hear from you.
Hi Shirish.
Good, thanks. Just 2 fundamental questions. I think first I must congratulate to Ram from bringing in a new thinking, that BSBF program which was driven towards rural, at least there is a change in thinking. So I'm sure you will see the good result going forward. So congratulations for that. The second part which is there is that traditionally we are seeing that last 5-6 odd quarters, the toothpaste category growth is under pressure. So fundamentally, if I understand correctly, the category drivers which has happened 3 years before with the natural segment taking a lead, freshness is growing. Why the whole category is struggling to come back? I mean, I do understand twice a day brushing and the frequency of consumption is the challenge, but some of the category growth is not growing. So any insights on that?
Sure, thanks Shirish. Trust you're all well and healthy. Let me just clarify one thing. I think I'll go back and say on BSBF, we're making sure we're doing both, Shirish. I think we do not want to give up on the longer term and all the hard work we put into rural India. At the same point in time, we're making sure that we are starting the efforts with the 2 pilots I spoke about. So it's more about making sure we strike the right balance between urban and rural India, because I think there's per capita consumption opportunities on both ends of the spectrum. On category growth, I think it's been a tale of two, tale of 2 cities, right? Rural consumption was the one that actually had started seeing the slowdown, and that pretty much had kicked in from I would say calendar Q3 of 2019 itself, and largely driven by liquidity challenges. So it's not a unique thing that was seen on toothpaste alone. I know we were seeing it on multiple categories. So it was a broader macro issue more than anything else. Urban consumption actually had not seen that bad of a decline. So it was largely a rural phenomenon affecting the entire broader market. Now I'm saying this before Q1. Q1 obviously has changed things, and I think Q2 will only continue to change because Q1 only has March, and March only for the last 10 days or so. So I think urban, the bigger drivers for urban India growth, or why urban India growth continue to sustain, at least from our perspective and our hypotheses, was a couple of things. One is a radical shift or big shifts that happened in the context of retail environments. I think that change and that structural where consumers shop change had a positive impact on the category, simply because when somebody entered a modern trade environment to shop, the expectations were very different from that of walking into a kirana store, and therefore the same consumer was often willing to pay a higher price or buy a more premium product at a modern trade environment. So one witnessed a lot of that value growth coming onto it. Second, I think the customers or the big guys themselves put in a lot of effort to drive traffic, whether it's the big days, whether it's the big events, whether it's their own loyalty programs. You saw a lot of effort being put in on part of the customers themselves, and I think that gave the second impetus, so to speak, to see better category growth in urban. Now, where and how life plays out in the next 2 quarters, good question, Shirish. I don't think any one of us will be able to predict what that's going to be like.
Yeah, I'll just follow up on that. What is the CY19 category growth?
Full year?
Oral care? Toothpaste.
For toothpaste or for...
Toothpaste.
Sorry, I missed your question, Suresh. What is the category?
I'm asking what is the toothpaste category growth for CY19 and maybe if you can say Jan-Feb.
Okay. So full year value growth for Nielsen. Full year value growth was about 4%, and quarter one, if I take quarter one, about 2%. On volume was flat for 2019, and quarter one is about negative 3%.
Okay.
Just what value?
Yeah. Thank you for that. And my last question is on the toothbrush. I think recently we have seen that there are a lot of challenges, and we see the regional competition. Even Delhi player has become suddenly active in toothbrush. So would you be able to elaborate what's happening in the toothbrush category? Because we are seeing that we also had the winning proposition in toothbrush, but even the sales is not meeting up the expectations.
So on toothbrush, I would start off by saying it's still work in progress for us, Suresh. I think we've identified it as a bigger challenge for us. We missed the boat on innovation, frankly speaking. You're now seeing from us, what you're seeing really is an accelerated efforts to catch up and then ultimately step up to a place to lead that entire process. If you recall back, India invented Super Flexi, India invented Zigzag, India invented a lot of these things, and we just have to keep the momentum back on it. So all the good work that we've done on toothpaste, or we've started to do on toothpaste, we've got to replicate that on toothbrush as well. So and we've got a toothbrush has two aspects to it. Like I said, one is obviously the innovation side, and second, it's got a very big trade play. From a trade point of view, we've got to remain competitive. We've got to make sure that if our brushes have a higher stock weight, then you're going to end up winning, because quite often a consumer, specifically in smaller stores and smaller markets, may not remember what brand he or she bought last. So I think innovation and more competitive posture in terms of our trade outlook.
Thank you. We take the last question from the line of Arnab Mitra from Credit Suisse. Please go ahead.
Yeah, hi. Thanks for taking my question. My first question was on the natural segment. If you could give an update on what's happened last year, has this segment still grown faster than the market? And within this segment, I know Ved Shakti, you've taken a lot of actions, but do you think what you've got is enough? Do you need to expand the portfolio more here, given that there are some taste profiles and product profiles which you still don't have in your portfolio?
Great question. So I think naturals have grown, and yes, it's certainly grown faster than the rest of the category, given what I just stated on the category numbers. And our business has grown extremely well as well. So I think, like I said, when we met last time, we spoke about the fact that when we launched the product, I think we've got a fantastic product. Our challenge was a proposition that was uniquely or distinctively us. In all our consumer work that we've done, the product remains something that consumers actually like and enjoy. And more importantly, families like it and enjoy it, and children like it. They find it at the right level of what one in our world would call spice level. So it has that level of spice that a child or children in a family can manage, while still having that required aftertaste or that aftermouth feel that one expects from a natural bundle. So I think on the product side, I think we always felt good about what we had. Our biggest issue was a proposition that was uniquely Colgate. We were very clear that we cannot try to